Hi everyone, welcome back to Corporate Decoder, the place where we take those massive corporate reports and make them understandable. Today we are diving into the latest 10K filing from BioAdaptives, a company focused on natural health products. Get ready because this report has some interesting twists and turns. It's a real bioadaptation. This is their annual report for 2024. Think of it as a yearly checkup, giving us a peek at what they did well, what they struggled with, and what they're planning for the future. BioAdaptives is all about natural products and medical devices for both humans and animals, especially focusing on weight management, antiviral stuff, and anti-aging. BioAdaptives has been around for a while, incorporated in 2013. They went through a period of not reporting to the SEC, then came back. There have been stock splits, changes in leadership, and shifts in their business focus. Let's dive into what's been happening more recently. Big news first, in May 24 there was a leadership change. James Neer took over as chairman and CEO, so there's a new captain steering the ship now. Gimano Disanayake also joined as a director, bringing in fresh perspectives. The company also did a reverse stock split, meaning they reduced the number of shares to increase the price of each share, and also gave a stock dividend rewarding existing shareholders. Now, about their business, BioAdaptives is all about natural supplements and medical devices. They're reformulating their product line, meaning they're changing how they make their products to come out with new ones. One of the key products they're working on is Zeronovia, a weight management supplement. They're running clinical trials, and the initial results look promising. It helps people lose weight while keeping their muscle mass. They're hoping to launch it in the second quarter of 2025, meaning around April to June. They are also working on Excelara, a regenerative stem cell activator. They expect to sell that in April 2025 too, alongside Popar Regen, which is a stem cell activator for dogs. They say that one is like an anti-aging treat for your furry friend. Pretty interesting. There is also MindMed, an advanced nootropic, something that boosts brain function. It's designed to improve memory, focus, and mood. To get the word out, they're using a mix of online marketing partnerships with telehealth companies and affiliate programs to get the products in front of customers. All their ingredients are plant-based and sourced from suppliers all over the world. They outsource manufacturing to ensure quality. Interestingly, the company only has one full-time employee. They hire hourly workers and consultants as needed. They plan to bring in more people as the company grows. Now let's talk about the not so good parts or risk factors. As with any company, BioAdaptives faces challenges. They have a limited operating history, meaning they don't have a long track record to look back on. They've had some unsuccessful business plans in the past, so there's no guarantee they'll hit a home run this time. They also don't have enough cash coming in to cover their expenses. They rely on outside funding to keep things going, which can be risky. They might need more financing to become successful. There is also some uncertainty if they will be able to get additional investments. This is always concerning as it can affect future operations. Another risk is that they depend on a few key people. If they lost one of those people, it could hurt the company. They're also planning to grow a lot in 2025. If they can't manage that growth effectively, it could cause problems. Because they are in the food supplement industry, changes in government rules could also impact the company. All these rules could cost the company money and disrupt their plans. The company admits that its internal controls may be inadequate. It could make financial reporting unreliable and lead to misinformation to the public. As a small company, it also means it does not have that many people to segregate responsibilities for different tasks. This is not so good. They maintain a single physical address in Las Vegas. Their stock trades on the OTC market, which is known for being volatile and having limited trading activity. That means the stock price can swing up and down a lot. Their financials show minimal revenues, about $12,000 in 2024. Their new CEO decided to cancel a lot of products and is working on developing meaningful dietary supplements that he hopes will provide revenue in the future. They had operating expenses of about $429,000, mainly for stock-based compensation and debt amortization. Their cash position is $137,000. They have inventory of $19,000. Total assets is about $2,061,000. Accounts payable and accrued liabilities total $179,000. Derivative liabilities are over $1 million. Total liabilities is about $1.7 million. They also have an accumulated deficit of over $9 million, which is not so good. Their loss from operations was around $600,000. Their net loss is around $900,000. Their cash flow statement indicates they are using cash in operations, which is consistent with a company trying to develop their pipeline. The big picture, BioAdaptives has a history of losses and needs more funding to survive, which is something that the auditors also agree on. It's all dependent on them implementing their business plan and the plan generating sufficient cash. The company has been issuing lots of new stock to help with operations, including issuing preferred D shares. As of the end of last year, the largest group of share is owned by James Keener. And finally, the company lacks a code of ethics for its financial executives, which is concerning for compliance and governance. Their derivative liabilities, which are related to the convertible notes, are over $1 million and classified as level 3 fair value, meaning they are based on unobservable inputs. This classification raises concerns about the subjectivity and potential volatility in their valuation. Now, looking at these numbers, BioAdaptives has a lot of work to do. While their focus on natural products is promising, they need to generate revenue and manage their expenses carefully. The leadership change could bring fresh ideas, but they need to tackle the financial risks head on. They have some interesting products like Xeranovia and Pulpar region. Let's hope they are successful. Thanks for watching. If you found this analysis helpful, please like, comment and subscribe for more corporate deep dives.